The price of gold surges despite recent global inflation trends cooling down. We're here to uncover what's behind the unexpected rise. Let's talk about it. I'm here with Dylan Jovine from Behind the Markets. He's here to discuss one of the biggest stories this week, gold, and it's been breaking new all-time highs. Thanks for joining us, Dylan.
Thank you for having me, Lacey. Grateful to be here.
Yes. All right. Let's jump right in. Dylan, the price of gold usually rises during times of inflation, yet recent data shows that inflation is finally cooling here in the United States and in the rest of the world. Yet gold is breaking new highs this week. Can you tell us what the heck is going on here?
That's a good question. It's left a lot of Wall Street analysts and a lot of folks scratching their heads, but here's what most people don't know. China has been the largest buyer of gold this year, according to the World Gold Council. I mean, they've bought 181 tons already so far this year. They've been the biggest buyer for the past 9 months. So they've just been, I wouldn't say cornering the market, but completely dominating the gold market.
So why are they buying so much gold?
Well, China, two reasons really. China's trying to get away from using the US dollar as the world's reserve currency. And what they're really trying to do is getting other countries to ditch the dollar as the world's reserve currency. I mean, they want the world to use and trade in their currency, the yuan. So they're trying to get they're trying to topple the dollar. And it's really like kind of a big attack against the US financial system. And they've been making progress all year. I mean, in February, they got Iraq to ditch the dollar for trade. In March, they got Brazil, the largest economy in South America, to ditch the dollar for trade. In April, they got Argentina to ditch the dollar for trade. And just last month, they got Saudi Arabia to agree to sell oil to China in Chinese currency instead of dollars for the very first time in history.
Yeah, so I did see that news a few weeks ago. So Saudi Arabia agreed to sell about $7 billion worth of oil in China's currency instead of the US dollar. So that seems to be kind of a big win for China, a loss for the US. But how does buying gold help China topple the dollar as the world reserve currency?
So China's been trying to topple the dollar for years, but nobody's ever taken them seriously. Every other big country's kind of laughed. And the real reason they've been unable to do it is their currency is not convertible. For example, if Saudi Arabia sells oil to China and they get paid in the Chinese currency, they can't convert that currency into other currencies. And that's a big advantage the dollar has. But if China backs their currency with gold, then the currency itself would have value and people in different countries would be okay to trade it. And, let's be frank here, in a gold-backed currency might be more attractive to international investors than instead of a US dollar where we're just printing inflation, printing money all day long. It's crazy. This government can't stop printing money.
All right. So you think China is going to launch a gold-backed currency? If that is your thoughts, when do you think this is going to happen?
Well, I'm saying it sure looks like that. They're setting the tables. They put all the pieces in place. All the groundwork has been laid this year. I mean, they're buying record amounts of gold and they're getting countries almost every month to ditch the dollar for the Chinese yuan. So, if it looks like a duck and quacks like a duck, it's kind of a duck. So, it looks like they've set the table for that. And to answer your second question, China's central bank could make an announcement on this literally any day, any week, any month now. I mean, all the pieces seem to almost all be in place.
All right. So that all being said, how do you think that this is going to impact the financial markets?
Well, I mean, my biggest single concern as an American financially is the loss of the dollar as the world's reserve currency. I mean, I can't imagine anything more disastrous for this country, for our country. I mean, it would reduce the net worth of every American by at least 25%.
Can you expand on that a little bit? How so?
Okay, so think about it this way. Right now, almost all trade is done in US dollars. So let's say Mercedes-Benz, a German company, makes a $20 billion profit selling cars in the US. That means they're sitting on $20 billion extra dollars. So what do they do with it? Well, it doesn't just sit in a bank account. They'll go out and take some of that money and buy treasury bonds with it. Now, Mercedes is just one company. Every company on earth, almost every company on earth does the same things. They trade in dollars. They're paid in dollars. Having the world's reserve currency means that almost every Mercedes-Benz type company on earth that sells something gets paid in dollars. That adds up to trillions of dollars a year. And those trillions of extra dollars are used to buy things like US Treasury bonds. But if China launches a gold-backed currency, Mercedes will say, okay, you know what? Instead of investing $20 billion in treasury bonds, why don't we put $10 billion in treasury bonds, put another $10 billion in this gold-backed currency? So could thousands of other companies, central banks, and investment funds from around the world. I mean, it's just a better store of value. It's backed by gold. Mm-hmm. So if the government can't sell as many treasury bonds because half of that money is going to a gold-backed currency, they could be forced to cut defense spending, Social Security, and other social programs. I mean, it's quite a big mess we find ourselves in.
So it does sound like that could become kind of threatening here. What steps could our viewers take right now, though, to put themselves ahead of this?
Well, for starters, you can invest in gold. If China continues down this path, which it looks like it's committed to, gold companies should do pretty well. I mean, and in that department, I like Royal Gold, RGLD, because they're playing the gold opportunity a little bit differently than most. I mean, mining for gold is a very expensive business. I mean, think about it. You're building mines, you're digging, you're trying to find it. It's very capital intensive. And what Royal Gold does is, they let other people do all that expensive mining stuff. And they either buy the gold that they pull out of those mines, or they pay them a stream of royalties when they sell it. So that gives investors higher returns on capital, which allows this company to pay out bigger dividends. And they just announced good earnings and another 7% increase in dividends. So it's a play on the increase in the price of gold as well as dividends. I also like, our old friend Newmont Mining here, because it is the largest gold miner on earth now. And, they're sitting on the best world-class gold reserves out there, period. And they also, as a hedge, have exposure to copper and silver, which, can act as a hedge if gold prices decline in the future. But, what I like the most about Newmont is it's definitely cheaper. It looks like 40% cheaper to me than any of its other peers. And, if individual stocks kind of aren't your bag, another great way to play this is, you could buy a gold ETF. And one of the gold ETFs that I like are the iShares MSCI Global Gold Miner ETF. And the symbol for that is RING, R-I-N-G. That's just kind of an easy, no-brainer, sit back and relax kind of way to play this massive increase in gold.
All right. Well, those are some great options there for our viewers. Thank you so much for joining me today to discuss the gold surge, Dylan. Great insights here, and I'm sure that we'll talk soon. Thanks.